I, like most investors, are mostly invested in US equities, like the S&P 500, the Magnificent Seven, all those sorts of companies that are predominantly in the US. The United States provides the best place for businesses to thrive and for stocks to grow. With good regulation and an innovative environment, the US is home to the largest companies in the world. For me personally, in my portfolio, I only have a few funds that invest in foreign assets. Obviously, I'm not talking about things like Apple, where they do business in foreign countries. I'm talking about purely foreign equities. So I own VT, which is Total World Index, and it's about 20 to 30% ex-US, which means it's foreign investments. I also own AVNV and VXUS. I bought VXUS a long time ago and I just don't want to sell it, but I'm definitely not going to buy more of it because I believe AVNV is the superior international markets fund. It's the Avantis Value ETF for international markets. So we can see that throughout these recent years, the US equity market has just been increasing in market share very dramatically. This is not surprising because it's home to the largest and most successful companies in the world. Corporations and their stocks thrive in America, and that's not surprising. Most of the world invests in US equities. Most people in their retirement accounts hold funds that buy into the S&P 500, and all of these companies are based in the US. When we try to beat the market, we're not talking about the Japanese stock market, we're not talking about the European stock market, we're talking about the US stock market. It's such an important part of the entire stock market. So then the question is, what's the point of investing in foreign equities? And am I going to personally be investing more into foreign stocks? Now, why did I bring up recency bias in the beginning of this video? Well, it's because recently the US has been outperforming very well in the stock market. In the past 14 years, the US has outperformed the international stock market very greatly. We can see that they basically outperformed by 10 to 15%. And other than this dip in the mid-2000s, the US has outperformed in the 90s and early 2000s as well. We can see that the rise of the internet and technology advancing, especially in the Western world, has really benefited US equities. The main reason why international outperformed in the 80s was because of the strong markets in Japan and Europe, as well as a weakened US dollar. So in the 2000s, the US was experiencing the dot-com bubble and the financial crisis, all at the same time in this short time period. On the other hand, in India and China, they were experiencing great globalization and industrialization that brought their economies to the next level. So from these two examples of international outperformance, we can identify the factors that allow international equities to outperform US equities. If the US dollar was to weaken in any substantial way in the next 10 years, then we can see other countries start to pick up in their equity performance. It's definitely an uphill struggle for many of these other countries because of societal, economic, and overall governmental issues. If a country doesn't have corruption, then it's either decreasing in population size, not investing in innovation and growth, or there's just so many societal and maybe climate-related issues in that country. So for me, I will continue adding to my AVNV position because I believe that international markets will do fine. And if we do see any international outperformance, then this is the ETF that will outperform the rest. At the same time, I'm still heavily invested in the US because I believe they have the best chance of growth and innovation in the next coming decade. And you should remember that when you're investing in US assets, you're also investing overseas because so many of these large US companies also do business in other countries. For example, China. When China does well economically, Apple and other companies that do a lot of business in China do very well. Overall, build a portfolio that you feel confident in and that you believe will perform well over any economic conditions. Let me know if you learned something new in this video. If you did, please like, subscribe, and comment, and I will see you guys next time. Bye.